And a couple more coming in here. Awesome. Okay, so we're going to be talking about filing status and dependency. I wish they would have, it goes dependency first. I wish they would have um, kind of reversed it, but here we go. So at the end of this section, we're going to be understanding who or whom can be considered a dependent and understanding how filing status and the use of dependents can affect the tax return. All right, what is a dependent? Okay, it's a person other than the taxpayer or spouse that entitles the taxpayer to claim a dependency exemption as defined by the IRS. Now, for 2025 and since 2018, there has been no actual deduction for dependent. Those of us that are aware of what happened then, the standard deduction went up dramatically, but the extra like 4 grand that you would get to deduct your income per dependent is gone. This makes it a lot more streamlined, makes it a lot more, it makes a lot more sense, in my opinion. Um, and it gives you more focus on how dependents can qualify the taxpayer for certain credits. Again, they must pass a number of different tests in order to qualify, and a dependent can be either a qualifying child or a qualifying relative. Okay, so who qualifies? All right, well, first one is the qualifying child, which is generally the qualifying child is generally the ones that we see. Again, there are 5 tests. The first one is the relationship. So your son, daughter, stepchild, foster child, or any descendant thereof, in other words, a grandchild of any of them, or your brother, sister, half brother, half sister, step brother, stepsister, etc., or a niece or nephew of any of those. So it pretty all encompassing for any blood relative. Age. Okay, they must be under 19 at the end of the year and younger than you, which we don't ever see any of that. A student under the age of 24 and a full-time student for 5 months out of the year at the end of the tax year and younger than you, um, or your spouse if filing jointly, which again, that's a different situation. Or permanently and totally disabled at any time during the year, regardless of age. Generally, we see that when the dependent in question is usually an adult child who is living with the parents and is not working, could be 25, 35, 50 years old. Residency must be a U.S. citizen, U.S. resident alien, U.S. national, or a resident of Canada or Mexico. Must have lived with you for more than half the year. There are exceptions. Again, children that are born or die during the year, if there's any kidnapping or children of divorced or separated parents, that last one gets a little tricky. The interesting point of children who were born or died during the year, obviously, when you put that birth date in, if the child was born on the last day of the year, you still get the deduction, but there's some verbiage that you have to do that indicates how long they were with you. Well, if they're only with you a day, it's still the same as 365. You get the credit for all of it. Again, if there are temporary absences, again, when the child is due to illness, generally it's college, military service, or even detention in a juvenile facility. Again, the support test, this is important. Generally, again, for minor children, you don't see this. In the support test, um, the child can't provide more than half of their own support for the year, which is usually and that's not going to happen. And they can't file a joint return for the year. Again, most of these qualifying children are children. They're not adult children. Now, qualifying relatives, there's 4 tests to be a qualifying relative. Okay, a child isn't your qualifying relative if the child is your qualifying child or the qualifying child of any other taxpayer. It gets a little, it's not really that complicated. I mean, if the qualifying relative has the qualifying child relation or parent grandparent, then they need to live in the household for half the year. Any other relative or non-related person must live in the household for the entire year. Now, there are exceptions to this. For instance, if I pay for the complete support of my mother or father who live out of state, so they don't live with me, but I am supporting them completely. So not only do they live in another state, but if they live in either Mexico or Canada, I can claim them as a dependent. Again, member of the household or relationship. The person must either live with you all year as a member of the household or be related into you. And again, relatives don't have to live with you. At any time during the year, the person was your spouse. Again, you can't claim your spouse as a dependent. You're filing married joint or married separate then. And the gross income test, a person's gross income for that year must be less than $5,200. Gross income is all income in the form of money, property, services that isn't exempt from tax. Again, we see some instances where a married couple may have mom or dad living with them, and all they get is Social Security. Generally, they can claim them because usually the Social Security is so minor that they don't have to file, and there's no way that that is more than half of their own support. Taxpayer generally must provide more than half their support during the calendar year. Um, Again, if two or more persons provide support, but no one person provides more than half, it gets a little more complicated. Again, that's not something that we ever see. You'll find this chart in your 4012 when you get it. I won't go into the details, but sometimes if something isn't just doesn't sound quite right, you can use this sort of like if and then scenario. We use this for particularly with some of the refundable and non-refundable credits to see who can qualify. But for the most part, our determination of who is a qualified dependent is pretty straightforward. We don't have to go too deep in the woods for this. I mean, some people try and claim their dog every now and then, but obviously you can't do that. Okay, impact of dependence on a tax return. Um, Here are some of the bigger ones. The child tax credit this is the refundable part, not the, I'm sorry, this is the non-refundable part, is up to $2,200 for a child under age 17 in tax year 2025. So they had to be 16 or under. The year they turned 17, they don't qualify. Up to $2,500 to the American Opportunity Credit, and also um, it can increase for a single parent, they get head of household filing status, so the standard deduction goes up dramatically. So again, there are 5 tests for the qualified child, the relationship, the age, the residency, the support, and whether or not they file a joint return. The qualifying relative is either a qualifying child, household member, or relationship test. Again, the gross income is under $5,200, and they don't provide more than half their support. Now, filing status. So we're moving on to that. Right, there are 5 filing statuses: single, married filing joint, married filing separately, head of household, and qualifying survivor spouse. All right, for the last two, okay, you need to address what we just went over, the previous dependency issues, because again, you can't have one without the other. Um, any filing status for someone else, a parent can claim the taxpayer as a dependent, has a different filing threshold. And again, we won't really go into that. That's not something we really see either. So here we go. The filing status is determined the amount of the standard deduction, as well as other aspects of the tax return. For 2025, the standard deductions for single and married filing separately is 15,750. For married filing jointly and QSS, it's 31,500, and head of household is $23,625. And we'll get to the differences between the standard deduction and itemized deductions when we get in 2 weeks. Okay, other impacts on the tax return, the filing threshold, certain exclusion of tax credits if you do file married filing separate, and allowance for the full standard deduction for married filing separate status. Now, determining filing status. Now, this is, as I've said several times since we've got started, the 3/4 of our taxpayers are single. Okay, so taxpayers are, if they are single, if they are unmarried on the last day of the calendar year, and unmarried means never been married, divorced, legally separated with a court decree, or their surviving spouse where they do not meet the qualifying surviving spouse criteria. That would be meaning there's no dependent children. So here we go. Scott's divorce was finalized on December 30th of 2025, and he has no dependents. What would his filing status be for tax year 2025? In this case, again, it would be single because on the 31st of December, he's single. Now, on another example, if Scott's divorce is not finalized until January 1st of 2026, and there are no dependents, what would his filing status be for 2025? Well, in this situation, he can go either way, married filing joint or married filing separately. Again, that's something the two of them have to decide. And again, if there was a child involved in any of these situations, he could claim head of household. So married filing jointly, if two taxpayers are married, they can file a joint or they can file separate. Again, the IRS, as well as our organization, generally encourages people to file jointly because you get the higher standard deduction. There's higher income threshold for certain other taxes and deductions that could result in a lower tax bill and therefore a higher refund. Certain credits and deductions can't be claimed when using married filing separate. When you file a joint return, remember both spouses are liable for the tax and any interests or penalties if they're filing late or they have amounts owed that aren't paid. If one spouse's debts are causing the joint refund to be offset, the other spouse may be able to file injured spouse or to claim part of the refund. The federal innocent spouse relief does not protect state refunds. All right, we do not do the innocent and or injured spouse. It's a very complicated set of criteria you have to go through. If it's a real big problem, we suggest that they either maybe we'll refer them to the tax advocate, or they may have to go to a paid preparer in that situation. It really depends on how big this issue is. Usually, for folks who are filing married separate, who want to file married separate, they understand that the reason they're doing it is because one or both spouses came in with previous obligations. It's generally in our world outstanding child support. And so that's not something that maybe the new spouse wants to be a part of. And so that's why they file married separate. Um, Due to state tax rates or other student tax situations, they may find it lowers their combined federal state taxes to file separately. We have one married couple in particular that comes to us every year. Again, these are exceptions. And when you think about it, it kind of makes sense. He is currently collecting Social Security. That's all he has. She is currently working and has a fairly robust salary, for lack of a better word. So by her filing separate, although her tax rate goes up, none of his Social Security is subject to tax. So they net on a net basis, they do much, much better. Um, again, the tax law considers a couple married for filing purposes until they get a final decree of divorce or separate maintenance. And note two is, well, New Jersey is not a common law state, so we don't have to worry about that. So here we go. Examples. If a spouse were to die, and unfortunately we get our fair share of these that happen during the year. Um, Married couple living together, did not have any children or grandchildren living with them, what the surviving spouse never remarried. So spouse dies 12/15/25. Taxpayers whose spouses died during the tax year are considered married for the entire year. So in this situation, the surviving spouse, they can either go married filing joint, or they do- or and then in the future, he's going to be single or she's going to be single. Now, if the spouse dies at the beginning of 2026, again, they were both alive on the last day of the year, they can elect married filing joint. Or they could do married filing separate for that matter. In 2026, taxpayers whose spouses died during the tax year are considered married for the entire year. So you get that whole year that they can elect to file married filing jointly. And then in 2027, that would be single. So married filing separately qualifications. Again, a married couple can choose to file separate, which it can be beneficial if it results in less tax owed. Most of the people that we see, again, if there are no mortgage. There's no itemized deductions potentially involved. So in other words, they're renters, and they have roughly the same income. It's kind of no harm, no foul. Um, but again, it could change as one's income goes up dramatically. So there's some special rules pertaining to married couples who do choose to file separate. There is a higher tax rate. Okay, there's no credit for children or dependent care expenses. There's no earned income tax. Again, unless one of them is considered unmarried, and we'll kind of go into that at a later date. There's no higher education credits. There's no exclusion for the credit for adoption expenses, no student loan interest deduction, no exclusions for interest income from qualified savings bonds used for higher education expenses. If the taxpayer and the spouse live together at any time in the year, 85% of Social Security is taxed, period. Even if they don't have other income that would justify paying tax on 85%. And the filing threshold is only $5 of gross income. So if one spouse elects to use itemized deductions, they both must itemize. Now, again, that never really comes up because almost no one in our cohort itemizes. And again, generally, the tax law encourages married couples to file a joint return. Um, we do see some folks asking us to run it both ways. The good news is, tax-wise, as you're inputting the um, income into the software, as long as you identify whose is whose, in other words, this is the husband's, this is the spouse, her W-2s, interest is for both. Um, you can click on a little button there and it will show you, again, if it comes up with a negative number, that it may be best to go and do it married filing separately. Um, again, it's generally got to be a pretty big number for us to go through that extra work because now we got to delete all the spouse's information out of the return and start a new one for her and then putting his social on there as well. So it is a lot more work for us. Sometimes we will have the clients come back because it does complicate the return pretty significantly. So a taxpayer may file head of household if on the last day of the calendar year they are considered unmarried and provide more than half the cost of maintaining the household for themselves and a qualifying person who must live in the same household. Now, taxpayers must meet all three of these. The rental status, they're paying for housing, and they have a qualifying person that's living with them. In other words, generally they're not married, they're paying all the bills, and they're taking care of another person. Now, it gets a little complicated in some of our situations where, particularly if they are married, technically married by the law of the state of New Jersey or anywhere else, but they're residents in Jersey. However, the husband or wife is not in the picture. They're not in the household. They haven't been in the household for years. Either they went back to a foreign country, they live out of state, they moved to North Jersey. I haven't seen him or her, and we maintain no contact with him. So again, that's a situation where I would consider this person unmarried for purposes of filing because obviously they're taking care of another individual that's living with them and they're paying all the bills. And so in that situation, they would be, again, we're trying to identify a filing status that justifies their current situation. Now, ideally, if they're not living together, they should get a divorce or somehow have their marriage annulled or whatever. Um, but again, we're just trying to have the tax return meet their reality. So, head of household qualifying criteria, again, the taxpayer paid more than half the cost of maintaining the home for the year. Only includes home expenses such as rent, fair market value of the home, again, mortgage interest, real estate taxes, et cetera, et cetera. It's pretty obvious what their uh, housing expenses are. A qualifying person, a child, or a relative must have lived in the home for more than half the year, and a dependent parent does not have to reside with the taxpayer. Again, that person could be living in another state or Canada or Mexico, and their marital status. The taxpayer is unmarried, legally separated under a separate maintenance decree on the last day of the year, or divorced. Again, the taxpayer can only claim head of household if they did not live with their spouse for the last 6 months of the year. So in other words, I don't know where he is. He's not living with me. Fine. I get that. Um, and meet the other two criteria. In this case, there's a qualifying person, can only be the taxpayer's dependent child, stepchild, or eligible foster child. So here's an example of head of household. Uh, Jeremy is divorced, paid for 100% of the cost of keeping up the home for the year. His son lives with him, and he is the primary caregiver for his minor child. What is his filing status? That's about as clear as you can get for head of household. He meets all the parameters. And again, as far as going back to what we talked about in week one, Jeremy's going to come in. He's going to have his social, and he's also going to have the social of his minor child. Example, another one, Jeremy's divorced and paid for 100% of the cost of keeping up his home for the year. His minor child lived in the house for 3 months in the summer. What is his filing status? Well, again, um, Jeremy, he's single. Again, he doesn't meet any of the qualifications. So it's quite obvious going in the other direction. Okay, so whoop. All right, so qualifying surviving spouse, we maybe get one of these a year. Again, this is generally a situation where a taxpayer is married during the tax year and passes away, and the surviving spouse may elect to go married filing jointly or separately. Again, for 2025, the spouse must have died in either 2023 or 2024, and the surviving spouse must not have remarried before the end of 2025. Basically, it allows you to continue to get the higher standard deduction for 2 years. After that, you'll be switching to head of household so that your standard deduction is going to go down a little bit. But again, you get the benefit for the much higher standard deduction for 2 years, as long as, again, that child, the dependent, didn't have gross income of more than $5,500. The child filed a joint tax return, or the surviving spouse child must live with them for over half the year. Again, we don't see, I think I've seen two of these over the last 10 years. So impact on the tax return. Filing status can impact tax return in several ways. Again, for a single person, all it really does is direct them into which tax bracket and what the standard deduction is for that year. For married filing joint, it allows for both spouses to report their combined income, doubles the standard deduction, okay, and the tax bracket is 2 times the amount of the single file. Married filing separately. Okay, each spouse can file separately, but that puts them in a different and generally a higher tax bracket than married filing jointly or filing single. Again, it also disqualifies the taxpayer from several credits, which I went over, and the taxation of Social Security income. Filers cannot file single if they do not qualify as unmarried. Well, again, this gets to our situation where, again, when both taxpayers want to file married separate, I need to know the the name of the spouse and his or her social security number. Sometimes again, it's particularly if they're new, they say married filing separate. And then you kind of do a little digging, and it's part of our due diligence during the interview. And they say, well, I don't know where he lives. I haven't seen him in 5 years. Well, how have you been filing? Usually single. I'm like, okay, that's what we're going to have to do then. Because again, if they don't have any uh, information regarding to his um, social security number, and proper name for that matter, we have nothing to work on. So in that case, we'll go and file single. Sometimes we've come in and we'll do that, and it'll get rejected because it turns out we didn't get the full story from him, and his spouse went and filed um, married filing separate and indicated that his or her on their return and their social. So again, if one goes that way, the other one has to as well. Um, for head of household, filing as head of household offers a different tax bracket and a higher standard deduction than filing single. Again, lower tax bracket at the 10 and 12% level. Qualifying surviving spouse with dependent child. Again, this filing status gets the MFJ tax bracket and standard deduction for 2 years after the spouse had passed. So again, recapping on filing status and dependents, there are five filing statuses: single, MFJ, MFS, head of household, qualifying surviving spouse with dependent child. Again, there's a unique formal filing threshold, uh, and you have they're dependent of another taxpayer. The one thing that we want to be careful of, that second one there, generally the taxpayers who file who are dependent of another taxpayer are usually students. All right. An 18, 19, 20-year-old comes in and has 5,000 or $4,000 from a summer job, and they say something like, my parents aren't claiming me, or I'm not being claimed. Chances are that's not right. And we'll play around with that when we get into the software. I generally err on the side of caution and indicate they can be claimed because it usually doesn't impact their tax return, because they're going to be they should have like no tax liability at all. So they're going to get back all the withholding one way or the other. Um, Filing status impacts many aspects of the tax return, including the bracket, standard deduction, and eligibility for other credits, which again, once you get that correctly in the software, it's going to flag all that, and that's where you kind of work on all your due diligence questions for the various credits that they may be entitled to. So what I'd like to show is, since this is one of the quicker modules. So this is TaxWise. I'm going to show you how it looks like for how to indicate how to put all the basic info in and indicate their filing status as well as any dependents. So this is a live system. I'm going to go to one of our least used sites and just kind of briefly go. This is what TaxWise will look like when you get your login. I'm going to create a new return, and I'm using a dummy Social Security number because this one isn't gonna go anywhere. Okay. Okay. So when you come into TaxWise and you create a new return, this is what it's going to look like. And on the main information page, which is what it defaults to, it's pretty straightforward that what you need to do. And this is, again, I'm just going to kind of go through it. It's like caps lock. And you're gonna get down here where a lot of things are highlighted in red that kind of tells you uh, what you need to fill out to complete. So here we've got, again, yellow in red is very important. We get the phone number, and I am, oops, what's my slide? There we go. No, there we go. Okay. Okay, so I'm gonna keep going down. Again, a lot of this, again, we can ignore foreign addresses. There's some special processing things that we have to address, like did my address change from last year? The answer is no. This is hard coded because if anybody did have income from Puerto Rico, we couldn't do it. Again, I didn't have insurance through the marketplace, and I didn't sell any digital asset. Again, we could probably hard code that, but we actually do have a few people who dabble in Bitcoin every now and then. So as we go down here, I'm going to filing status. So I click on single, that's it. Okay, it's that simple. And now at the bottom here, there's some more boilerplate that we'll get into, but everything defaults to preparing a New Jersey full year resident return. We'll go through some other issues. The stuff at the bottom here is generally stuff for me. That'll be hard coded for everybody. But what I want to show you is, let's just say turns out I'm not single. I am a single parent. And I'm going to put my dependent information down here. And this came off the yellow intake form that we reviewed last week. So I got Bobby Bright here, and Bobby was 01012023. Okay, so Bobby's 1 year old, and his social is he's my son. So you have to fill all this stuff in. Again, the months in the home is almost always going to be 12. And then there's the code in here where it's got to be one of three. So your child who lives with you, your child who does not live with you with to divorce or separation, all other dependents. So again, those would be your nieces, your grandchildren, etc. Almost always we're going to have a one. And right away, see how it clicked on, because it's a 1 year old, it automatically indicates that this dependent would qualify for the earned income, I mean, the child tax credit. So right away, it's going to be asking me, once I get some income in, it's going to be asking me some due diligence questions for whether or not I qualify for the child tax credit. So again, you kind of just go down through here, you add all those in as you're adding more children, or in this case, let's just say, not only do I have a 1 year old, but I have a 49-year old, and I'm just going to say it is a brother. All right, so I have a brother. He's 12, living with me. Oops, sorry. It's a three. Okay. So right there, obviously a 49-year old does not qualify for the child tax credit, but it does qualify for ODC, which is the other dependent credit, which is what most adults um, qualify for. In other words, you're a college student, you're a 25-year-old college graduate son or daughter who hasn't found a job yet, is still living at home. They'll get qualify for the other dependent credit, which is a $500 non-refundable credit. So that's just a little taste there of kind of like how we start working through the return. So, between what we picked up last week, um, the um, the intake form and the interview process. And now this, you can see kind of how we kind of work our way through. Next week we'll be doing some the module is on income, and along the left-hand side here is a grid of all the various forms that we'll use to put that income that we'll review into the return. So I'm gonna just go ahead and close out of this, and I'm going to stop this.